Hello once again, and thank you for tuning into this little episode of the home buying series. Kind of going over the home buying process, teaching you a few things, tips and tricks, some know-how, and hopes to get you well on the way to buying your dream home. So I appreciate you tuning in yet again. So today's topic is going over basically what not to do, financially speaking, during this whole either pre-approval process or purchase process. And I call those the 10 commandments when applying for a real estate loan. So once again, I'll point you to the handout that I can either email or print off and send to you. So there's a whole page of these, and it's kind of tongue-in-cheek or whatever, but I can basically tell you specific examples of almost every single one of these, and you may think, oh, of course, why would you do that? Well, it's they're on here because it's happened before, and just want to kind of get it all out there and tell you what not to do. So number one, thou shalt not change jobs, and that goes for switching into owning your own business or something. All that's well and good, but just not during the real estate transaction. So I've had people switch jobs before, and they spoke with the lender prior and made sure that would be okay. Just don't spring it on anybody. It can be quite the jolt right there at closing, or right before closing, when the lender calls your employer for the last time to make sure you're still employed there, and they say no. That's a problem. So regarding job changes in general, if you start a new job and it's kind of in the same field as your prior job, that's not such a big issue. So let's say you're a teacher, and then you take a new job within the same administration or in the same school system, and now you're an administrator. The lender's not going to pitch too much of a fit about that. Now, same scenario, if you're a teacher and then you go out and get your real estate license and quit your teaching job, that's where they have a problem. So it's not kind of the same or similar job. It's not a lateral move. It's a totally different move. They're going to have problems with that. So do not change your job during the middle of all this. Number two, do not, or thou shalt not buy or refinance a car, truck, boat, anything with wheels, basically, during this process. Again, specific examples of basically somebody getting their offer accepted, going through inspections, going through appraisals, and their car breaks down, and instead of just holding off or just fixing that car, they thought that they deserved a new car, and so they go out and borrow the entire cost of that new car, and all of a sudden their debt to income ratios that the lender uses is over the threshold. They can no longer buy the house, and that's exactly what happened. And it's not just oh, I'll return the car, I made a mistake. No, you're basically tied to that debt until that debt is gone and off your credit report, which does not happen very quickly. So do not go out and buy a car, or honestly anything big, and borrow for that. So, and even if you don't borrow and you exhaust all your cash reserves and they pull your bank statement one more time before closing, they could also have a problem with that. So just don't go buy something big at all during this whole time. Number three, thou shalt not use charge cards excessively or let your accounts fall behind. So obviously stay on top of all your bills, especially the debt bills that you do have. The best way to explain this is to be as financially boring as possible for the next 30 to 60 days. I understand that life happens, and something will break during this time. It's almost inevitable. But before you do anything financially speaking, please speak with primarily the lender, because they can give you a better answer than I can, because all I'm going to do is defer to them. But talk to us. Make sure what you're doing makes sense and will not affect your home loan or the process. Number 4, thou shalt not spend money you have set aside for closing. Again, emergency comes up and you want to take care of something, so you spend all your cash and all of a sudden you don't have cash for a down payment. Well, then you can't close at that point if you don't have that. You can't go out and get another little side loan for that down payment. That will mess everything up in the process as well. Number 5, thou shalt not omit debts or liabilities from your loan application. That's basically lying. So you fill out this loan application, you say, okay, this is approximately what I owe on like a student loan, on a car or whatever. They will find out. The lender is going to find out. They're going to pull your credit. And that's more than just a score. It's your credit history, who you owe money to, how much it is a month, if you're delinquent, if you're behind, stuff like that. So don't omit that on a credit application when you go for your pre-approval. It's just not going to turn out very well. Number 6, thou shalt not buy furniture, and I'm going to say, or appliances during this time. A very specific example was that somebody was really excited to close and on their new home, and they were going to get immediate possession. So they needed a couple appliances. I think they needed a washer, a dryer, and I think they maybe even went out and just basically basic furniture they were going to purchase. They did that, and they did that in the form of credit, and they had the moving truck ready to go and the delivery truck ready to go to meet them there after closing. The lender will pull your credit one more time right before closing, and lo and behold, their debt ratios were off. They could not purchase the home, and they have 2 moving trucks full of their personal possessions and new furniture that they purchased waiting at a house that they couldn't buy. That's probably the worst case scenario I've been a part of, and I don't want anybody else to go through that. So do not purchase or finance any appliances or furniture, please. Number 7, thou shalt not originate any inquiries into your credit. So when you're shopping for your loan, you're getting your pre-approval. Not a bad idea to kind of shop around a little bit. And kind of the details behind that is that the credit bureaus sees that you're shopping for a mortgage. So basically, I believe, check this with the lender, but I think within 30 days you can check up to a few mortgage lenders and their rates where they pull your credit. It's a hard inquiry. Don't go crazy, but 3 or 4 of them will count as one hard inquiry on your credit. That's not a problem, okay? The problem comes in is if you go to Menards and apply for their credit card, if you just want to see, after closing, I think I'm going to buy a car, let's check those rates. Oh, they need my credit number, or my social security number to get my credit score. Yeah, go ahead and do that. Well, the lender and the underwriters are going to say, whoa, they're planning on taking on a bunch of new debt. I can see it. I see it at the department store. I see them asking about car loans or whatever. So that could be a big issue, and that will drop your credit score. So don't do that. Number 8, thou shalt not make large deposits without first checking with your loan officer. So you may think, oh, I have this money coming in. Why would they ever have a problem with that? Again, you should be as financially boring as possible. The lenders really don't want any weird things going on. Large deposits going in, large deposits going out, unless that's normal for your financial situation. And if it is normal, they're still going to ask for a ton of verification and paperwork of why that's normal for you. But if I've had this come up to where somebody they kind of sell a few cars over the years, so they buy them for cash, they kind of fix them up, and they sell them for cash. Well, if you dump that cash into your checking account that the lender can see, they're going to be ultra worried of where that money's coming from. So the Patriot Act has a lot to do with that, and basically banks, lenders, or basically the government They don't like to see a bunch of cash moving around, and especially if it's coming in and out of your bank accounts. So just if you can, if you have that kind of operation, if you will, within your finances, first of all, let your loan officer know at the beginning, hey, this is what I do. I have a little side gig, I do this. Or maybe you're paid out a settlement for something, I don't know. Be sure they know about it ahead of time. And then if it comes in like as a surprise in the middle of all this, talk to them first, pretty please. Number 9, thou shalt not change banks. That's a big one too. Yes, you get mailings and emails about, hey, come over to our bank and we won't charge you for your checking account and we'll give you this much back. Just don't do that during this time. Wait, if you really want to do that, just wait till after you close. Changing accounts, again, moving money around, that's just a bunch of red flags for the lender, and will kind of gum up the process. And then number 10, thou shalt not co-sign a loan for anyone. So if you don't quite understand what co-signing is, you're basically saying, hey, if my cousin Fred over here doesn't, maybe he's not credit worthy enough to buy, we'll say, a car. Hey, I'll co-sign that loan. And basically, so if Fred doesn't pay it, I'm responsible for it. And that counts against your debts and your debt load and your debt ratios and everything like that. So it is as if that is personally your debt. So basically, don't do that. It's going to basically mess up everything. So that's it. 10 commandments when applying for a real estate loan. And if you follow those things and just the overarching term, yet again, being financially boring as possible during this process, you'll have a much smoother transaction and a lot less hiccups, and you should be ready to close your loan in a reasonable amount of time. So thanks again for tuning in, and we will see you in the next episode. See ya.